Bitcoin's 100K battle. Why the lows matter more than the highs. That sounds like a crazy statement, I know, but bear with me, guys. Hey, it's Keith Allen. I hope everybody had a fantastic weekend. I know I did. And, well, looking forward to the week ahead. We've got some signals that we can talk about, but I think the big news at the moment is that we did just break 100K again. I'll be honest with you. I was writing this analysis, and my lead in initially was because of the rejection. We were talking about the predictable places that Bitcoin price was rejected from. And of course, we've now since broken through that. So I want to get into, in this analysis, I want to get into maybe what's behind this pump, the sustainability of this pump, what some of the signals are that may contradict the outcome of this pump, and what are really the key levels to watch. And as the title says, why the lows matter more than the highs. I think we all, at least the bulls, have a pretty solid idea that the cycle top is not in yet. At least that's my view, that the cycle top is not in yet. But I'm also of the view that there is a large, deep correction in our future sometime before we reach that cycle top. Does it mean it has to happen this week? Absolutely not. Does it mean it has to happen this month? Absolutely not. But I think it would be naive to think that we are in an up-only situation here. We could just be enjoying a Trump pump. And why would we have a Trump pump today? And you know what? I'm going to go to the screen and share that with you, so that you can watch what's happening as price action is literally developing right before our eyes. Before I do that, though, I do want to just give a quick shout out and a reminder. If you're new to the stream, do me a favor, smash all the buttons, hit that like, hit that share, and invite some folks into this stream so we can grow the channel. I do wholeheartedly and sincerely appreciate the ongoing support you guys have shown me. And if you haven't done so yet, make sure that you hit that subscribe button up above. It's the little bell up there on YouTube, so you don't miss any of my future streams. Let's go ahead and dive into fire charts, because some pretty interesting stuff going on here at the moment. Let's get this chart shared. I'm actually on the daily chart right now because this has the highest resolution to see that we have just punched through 100K. And what sparked that? Well, heavy buying. All order classes smash the buy button here. These are market orders. Bin CVD here at the bottom here on fire charts. These are market orders. And you can see all order classes bought to punch through. We had a similar situation last night, right around or shortly after, I should say, the daily, weekly close or open. And we had all order classes, again, smashing that buy button and getting us through. The brown mega whales came in a little bit sooner than everybody, and everybody followed here. Purple historically has had the most influence. Yellow, a little bit of a counter trade here, although they did bump up just for the moment and then began taking profit as price moved up. No problem with that. Don't think for a minute that this is retail getting wrecked. Sure, retail lives in this smaller order class, this orange or yellow order class here, but it is often dominated by well-controlled TWAP bots. So there's a mix of everything going on here. But as you can see, purple whales still buying very robustly here at the moment. Now, in terms of whether this is a sustainable move or not, well, you can see that this has been cleared out. So we need to see some liquidity move into this space above 100K to hold price up here. And that may be happening. We may just see this continued push. Now, what is behind this at the moment? I have a theory that this is another Trump pump. And why is today a relevant time to have a Trump pump? Well, today is the day. In fact, we're hours away from the United States Congress certifying the votes, certifying the electoral votes, and certifying his position, his election win as the next president of the United States. If you remember back 4 years ago, January 6th is a day that resonates certainly in America and likely around the world for a day of insurrection, a day of unrest, a day of an attack on the Capitol, and an attempt to stop the counting of these votes. Well, There's nothing of the sort, at least as far as reports have said. It doesn't look like anything of that nature is slated for today. Um, Democrats have said they're not contesting the vote. Security is way stronger than it's ever been on this particular event, and so there is no challenge expected, at least not en masse at the Capitol as we saw. So, in all likelihood, we're a few hours away from the election being certified, and Trump's inauguration will happen in a couple of weeks on January 20th. So we could likely be seeing this Trump pump develop right now, right before our eyes. And you can see price continuing to appreciate here. Shorts getting punished and likely going to get punished higher. Now, does this take us straight to all-time high territory? Well, momentum is certainly, if you look at this, you certainly have to be optimistic, but things aren't always what they seem. We do have significant resistance. Of course, our all-time high is up at 108,000 and change. There's significant resistance here at 110, at 110,000, and a decent ladder of asked liquidity between here and there. Now, our current all-time high is up at 108 and change, as I said. Now we had resistance here at this 100K level up until a few minutes ago, really, probably about 30 minutes ago, and that was a predictable spot, right? We had prior, this initially was psychological resistance, but we've had enough bumps up at this level that it's now become technical resistance and support, and we're now trying to validate an RS flip here at 100K. If things break down from here, what's likely? Well, those are things to consider here, right? And why might we have eyes on things potentially breaking down? I want to move over to trend precognition for a second and show you a couple of things. I need to show you on the right chart, though. So let's do this. Let's add BTC USD. This indicator really thrives on history, so I'm going to go to the index that has the largest amount of history here. And we had a signal here that's just been invalidated here. You see this signal right here? This is a signal strength meter. This opened up on the monthly candle. This opened up at about 56 or 58% strength. That means it was up here at this level. That arrow has now disappeared from up here because the strength of this signal has decreased below my threshold. I had a 30% probability threshold in there, and now it's gone, right? We're now at what, 26% probability. Now, this could regain strength between now and the end of the month, but this signal, in my opinion, has been invalidated, and so now we do indeed have a better shot at moving above. This is brand new, by the way. I mean, this was here this morning, or I should say, there was an arrow up here this morning, and this shows us why that arrow has now been invalidated. We do have good signals on the weekly. With this appeared last night at the close. So we do have a weekly signal up here for Bitcoin indicating that price would indeed move higher. Doesn't necessarily mean that it moves into an all-time high, but it does mean that price is not likely to go lower than last week's low, which of course we had that retest down there to the 91.5 level. And I want to show you why that's an important level, okay? And something else that we need to pay attention to. Notice this. We have a death cross between the 21-day and the 50-day moving average. Now, death crosses historically indicate that we have more downside. However, that doesn't always have to be the case, and I want to show you why it doesn't have to be the case here. Number one, these are... in the grand scheme of things, shorter time frames, right? The green is the 21-day, red is the 50, blue is the 100, purple is the 200. If we were looking at this on the weekly time frame, I would be more concerned. But as you can see, these moving averages are all currently unwound and on a proper, on a good trajectory. On the daily, however, this could be short term, especially if this pump continues, right? It could pull us right out of this. But I want to look at a little bit of history of how these death crosses between the 21 and the 50 have evolved over time. This one is a bit different because the moving averages were already crossed up, and so we were already in a downtrend, and this was an extension of that downtrend that did come with some pumps in it, but ultimately it took until they really unwound for things to really correct themselves. So the unwinding of this will be a very positive when it happens. Let's go back a little bit further. Now, here's one where we had the 21 death cross with the 50. This was coming off of the March high of 73,800. Okay. This was, for all intents and purposes, potentially our mid-cycle top here. And we did see at this point, we did see price to continue to erode a little bit before finding its footing and then correcting. And of course, we did see this start to unwind the other moving averages. Let's go back a little bit further. Here's another one. This one might be more akin to what we're seeing right now, right? We had these are lagging indicators, right? Moving averages are lagging indicators. So we had a dip. This is back at the beginning of last year when price was consolidating in this 40K range. And we had a dip, and price found its footing on the 100-day moving average, and we saw this bounce, right? And this bounce took us to new heights. So it could be either scenario, and at the moment, if this continues to develop, then that's the likely scenario, right? This unwinds pretty quickly, and when it does unwind, we're probably going to see another injection up to and potentially through the all-time high if it hasn't happened before then. So something else that we should consider is, what if this doesn't play out as expected? What if this RS flip doesn't hold? And why might it not hold? Well, the first thing that comes to mind is the fact that we've still not seen that deep correction that we get we've had it in every single bull market in history. I'm talking about a 20 to 50% correction. I've shown you time and time again the many times that we have seen that even in bull markets, right? This of course was the COVID crash, so that's a bit of an anomaly, a black swan event. But I think if that hadn't happened, then we would have seen price continue up on this trajectory without this dip here. After that, of course, we saw plenty of dips, and I'm going to just paint a couple of them really quick. This was a mere 20%, 21, 22%. We haven't seen 22% yet. This was 56%. We certainly haven't seen that yet. And so where would that take us if we were to go that high? Let's see what this one was. This one was another 21%, right? We've not seen anything deeper than that yet, right? So let's look at where we sit from our all-time high and where these corrections could potentially take us if and when they develop. And I think it's important to note that this is not a bear post. Okay, I'm still macro bullish on the market. I do think that because of where we sit in the cycle, and let me just zoom out for that, where we sit in the cycle, we've got plenty of time and potential for more upside. Okay, so this is really probably one of the biggest reasons I don't think that the cycle top is in yet, just because we're so early in the cycle. And look at these other cycles, right? Here's another giant dip. Let's look at this one for some perspective. That was huge upside, right? But this one was 75%. I don't think we're still going to see I don't think we're going to see a 75% dip or correction in this market at this stage in the game, because there's been so much institutional demand. And gosh, speaking of institutional demand, I think I think on Friday, the Bitcoin ETFs had one of their biggest days ever. I think this was top five. This was like one of the top 5 days of inflows. That's pretty significant, and it was and notably, right? Notably, BlackRock didn't lead it. Fidelity had the most inflows on Friday, and Kathy Wood's ARK Investments, her ARK B fund, had, I think, their highest day or second highest day ever. So those are significant signs that there's still lots of demand even at these prices for Bitcoin. So back to the charts here. We're talking about how far price has gone thus far in terms of a correction, and so far we've only seen less than 15% from that high. Is it? No. I think it's a bit more than that. Let's see. Am I there? Yeah. Here we go. So we've seen just about 15% from the high. We're looking for 20 to 50%. So where would 20% take us? You know, this 15% right here, pretty solid support. We've tested it several times here at this 91.5 range. You know, technically my range was 91.6, but you know, things get overshot here in crypto these days. But we had a nice support test. We've had several of them here on the daily. You can see 1, 2, 3, 4, 5, 6, 7, 8 support tests at that level so far, which is a pretty solid validator on an RS flip, I would say. Now, in terms of what I'm watching at the moment, let me get this. It is whether or not price can stay above number one, this 100K level. Number two, if things do break down, if it does retrace, can it stay above these moving averages? Sure, the 50 is on top right now, the 50-day moving average, but the 21 is the one it really needs to hold. If it falls below the 21-day moving average, then I think that we do go back and retest this level here. And if that holds, great, that's the next leg up. If it doesn't hold, then we go to the next leg down, which would be at this 86.6 level. And this is where this consolidation started. That would represent, oh, this is way too wide. That would represent a 20% correction, and that would satisfy a lot of technicians. If things were to break down from there, and where would they go? I think, well, this is that 86K range, and I think that's valid. A valid reason for things to go potentially lower would be, and if this doesn't hold, because let's face it, there was only a brief consolidation here at this level. If this doesn't hold, I would actually look down. There may be a pit stop here at the 100-day moving average, but I would look down to this 76K range, and the reason is it checks a lot of boxes for me. It's a 30% correction that falls with, a little bit more respectable in the range of deep corrections, if you will. It is above the 200-day moving average, which would still be fine. That's a couple of points deeper. And that would be a great foundational level. I think people will get scared if we get down into this 2021 top level at 69K. But even that would hold the macro trend would still be intact, right? We're down here at this point. That would be a 50% move. And even that would, or nearly a 50% move. And even that falls within the realm of the range that we look for in these deep corrections. And that, in my opinion, would be the strongest foundational support level that we could ask for. But man, a lot of people would just get abused if that happens. I really don't think that is in the cards at the moment, unless we have a serious chain of events whether it's a black swan or whether we have an issue with the economy under tariffs or something of that nature that pushes the economy down and inflation up again. So for the sake of this discussion, we're talking about the 76K level, and let me tell you why that is interesting to me. It's interesting to me because it does a couple of things, starting with filling the CME gap, which I had here. Where did it go? No. Let me open that up for you guys really quick. Just had that here, and now it's gone. All right, here we go. So we have a CME gap down here at 77.9, 78K, if you will, right? But there's not a lot of technical structure right there. So I could see if that gap does indeed get filled, if we do indeed go that deep, then I would say that price could stop at the 76, at the CME gap, but this is close enough that it might actually be attractive as well. We'll see. For the moment, though, all eyes are on what's going up. And in terms of the up-only conversation, I have another chart I'd like to share with you that I also don't seem to have open at the moment. So let's go find that one. Well, this would do it. If you recall, we have a cup and handle structure here. And my measured move on this cup and handle structure takes me up to about 122.5. But we're also seeing this lifetime channel. Obviously, as time goes on, that glass ceiling, if you will, on price discovery moves higher. So the measured move on the cup and handle, which you can see here and here. If I really need to load it for you, I will. By the way, guys, live chat is open. If you'd like to join me. What have we here? Sonny Dobro. Maybe the correction comes from a lot higher. Absolutely, Sonny. There's a very good chance of that, especially seeing what's happening at the moment, right? Nothing says that it needs to come from the current all-time high. Nothing whatsoever. Certainly could come from higher. And that point is so good. He said it twice. He said it on X and on YouTube. Hey, man, I appreciate you following me. Thanks, Sonny. Great comment. Indeed, it could come from higher. And if we break this all-time high, then my next target becomes the measured move on this cup and handle, which I'm going to show you here in a moment. Let's do this. Sorry, guys, I had that one open before, and now it's not. Here we go. So it could be a measured move on that cup and handle, which would take us. This is 77%. We measured this on, since I measured this on log scale, we go with a percentile move to the upside as well. And that would be from the rim, which was our prior all-time high, the 2021 top. And my 77% gets us right up here into the 122K range. And that is awfully close to where this channel is, right? This lifetime channel. Well, that lifetime channel moves over time. So potentially we could get a pit stop here at 122-ish, and potentially we could grind higher, but depending on when this happens, right? So, the 2.618 that's a 125% move from here. That's at 154K. That's also a reasonable psychological target, but not just a psychological target. You can see there's a technical target associated with that. 150K is psychological. 154 is where this 2618 is, and also has confluence with this lifetime channel. I believe that this lifetime channel will be our glass ceiling on price discovery we could conceivably bump up against it and never clear it again, or um, or potentially we get into it and gosh, at that point, the glass ceiling, in my opinion, is the top of the channel. I don't think that's happening anytime soon. We're talking decades for that to materialize. You're talking Michael Saylor type targets to get up to that level. So we'll see. In the meantime, I'm looking at the near term. Okay, my macro outlook is positive, and I think that we could conceivably right now be seeing a Trump pump inspired by today's certification. This could continue. We have inauguration day coming up on January 20th, which is in a couple of weeks, and so we'll have to see how things develop. Right, that inauguration day could end up being could end up being more fuel for the fire to pump things higher, or it could be a sell the news event. We'll have to see how things develop from here. I don't think we can just say with a blanket statement that it's up only and there's never going to be a correction. I do think there's going to be a correction, and so does Hasnain, if I'm saying your name correctly. 71 is on the tables as well. Well, it is, and I'll show you why it is. You listen, in the Wild West of crypto, you cannot rule anything out. Yes, this is still a Wild West, even though we are having more adoption and more institutional interest and more corporate interest and more interest from sovereign nations. Yes, adoption is growing, but this is still in my mind, a very volatile Wild West market because it can be so easily manipulated with relatively small amounts of money. When I say small amounts of money, I mean, you know, $5-10 million can literally move the order book. So in terms of what did he say? 71 is a target. Yes. Here's why 71 is a potential target. Obviously 69K was our 2021 top. Look where the 200-day moving average is at the moment. That's at 72K. Let's look at what the weeklies look like. The weekly moving averages, we have, let's see, we have the red 50-week moving average is at the moment above 70K, or excuse me, above 69K, and that's drawing up higher. 71, right here, we have a little bit of a little bit of confluence here at 71. I don't think that's as likely as a target as 76 is, but it's certainly viable because I think it's really going to be a battle to push down into this 2021 top. I don't think the market has any sentiment for that at the moment, but again, we never rule anything out. We let the data tell us what's happening. We let the charts tell the story. And at the moment, the story is Trump pump with a potential to go for an all-time high here, which currently sits at 108 and change. I'm watching, I'm not aping in. My Bitcoin position is developed. I am looking for opportunities and setups with alts to potentially make some greater gains on smaller amounts of money and let my Bitcoin position just do what it's going to do. I will look, if we get those big dips, I will look for opportunities to buy lower and add to my Bitcoin position. But in the meantime, I am, how should I say, looking for great setups on alts, buying those dips and selling those rips, printing more, stacking more powder to buy more Bitcoin when we do get that deep correction. And I don't think it's a matter of if we get that deep correction. I think it's a matter of when we get that deep correction. And like Sonny said, it may come from a lot higher. And I agree with that 100%. With that there, guys, I think I'm going to wrap it here for the day. I think we got a good start to the week here. It's great to see price action recovering. We're currently sitting at 101.9K and optimistic that we're going to see more out of this. Could potentially see some things meet resistance around 105K. And well, whether we break the new all-time high here before Trump takes office or not, that's highly speculative. Again, it's why I watch. It's why I watch the charts, and it's why I watch the moving averages. Right? Let's validate this RS flip at 100K. Let's keep price above. I say let's keep it like we can do it. I don't know about you, but I'm not whalish enough to do that. But we do have some, as you can see, we do have some good support building here above 98K, which still would be a solid RS flip in my opinion. But of course, the market psychologically wants to see that 100K RS flip. I want to leave you with one last look at fire charts. We've not yet seen liquidity move up. Let's see if we have a refresher on this. Hang on a second. To the upside, we have, as you can see, a pretty solid ladder of ask liquidity between here and 110K, which of course would be a new all-time high. On the daily chart, as you can see, we have not yet seen significant bid liquidity move above 100K. We're currently running into resistance at 102K. So we'll see how this continues to develop, and I'll be continue to be watching where liquidity is moving and what the order flow is doing here. And the order flow is a good indication, right? Despite the fact that we haven't seen bids move up yet, the fact that we're seeing whales still buying is certainly short-term bullish. And with that, I'm going to wrap it, guys. Hope you have a fantastic week. Hope this has given you some insight to deal with this week. And if you're interested, of course, in any of the tools, I've got descriptions to them all in the, I've got links to them all in the descriptions below. Have a great week, guys. Thanks again for the support. We'll be back at it again throughout the week. If you haven't subscribed yet, tick that little bell so you don't miss any of the future streams. Thanks, Hasnayan. Appreciate it.